Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York on Thursday, the first day of May 2014, and this is the daily report for gold and silver. We do have a continuation of the downside pressure, although off the lows currently in gold, the low being 1276.80. We have the market trading at 1284 and change. Puts it off roughly $6 on the day, so we are seeing a continuation of the market. High 1291.60. Silver continues its downside slide also, currently trading off roughly 13 cents on the day. Now the low 1858, interesting low, high 1929, current just hanging a couple of ticks above 19 at 1902. More on silver towards the end of the show. No doubt, interesting day in the market, and we are seeing downside pressure that I hoped we wouldn't see. Most importantly, we have traded through and are currently trading below 1287.48. Now that is the 50% retracement. It's not a real critical level, but it is a level, as I've said throughout the week, that I had hoped gold would be able to sustain and trade above. That's right here. Now, we are well off of the lows. We're looking at a 320-minute chart. You can see the lows right here, roughly at 1277. So what I've done, just to give us an idea of what kind of retracement we've seen off this last rally, and I'll go ahead and blow that up a little bit just for this one particular example. And all I've done is I've created a basic fib retracement going from this low to this high to see how far we've come down. And as you can see, we've come down roughly 76% in terms of retracement. It matches up quite nicely and in fact is moving back up off of that. So to me, that bodes well. That's the first thing. The second thing is if we look at this particular low right in here, you'll notice that they match up. So we've got a series of matching lows right here. And here, of course, we have to take out this low. But so there is, in terms of a technical basis, really some reason to find some support here. Now, we have the jobs report coming out tomorrow. We had some interesting numbers come out today, and comments by the Fed itself is in essence telling us that they're staying on course, they are continuing to taper, and they are happy with the equities environment, the economy, general economy in the United States. So that being said, we'll have to wait for the jobs report, but we got some disappointing numbers this morning from ADP. So in terms of a technical basis, 1277, obviously a level we need to hold. Our stops are below 68. We're in at roughly 92, so about $8 from here. We are behind the 8 ball. And most critically, of course, has been the fact that we have been maintaining ourselves above the 61% retracement level of the last rally. And of course, that is 1262, and that is what we're looking at. This, of course, is a short-term chart. Now, in terms of how it looks when we pull up our daily chart, there's no doubt 1, 2, 3, 4 days with lower closes. I'm matching this close against this close. It's either equal or lower, but as you can see, this market has been moving down. There's no doubt about that. At the same time, there's been some real support in the market because when we see it under pressure, we know what real pressure in gold can be like, and that's certainly not what we're exhibiting. We're getting these minor sell-offs here, but as I said, we are finding some support here at 77, and that's based on this low right in here that came in as part of that Three River Morningstar. Of course, we identified a dark cloud cover confirmation just yesterday, but my sense is that as long as we can hold this particular low, we still have an opportunity to see this trade really amount to an active, profitable trade, although right now, there's no doubt about it, we are under pressure. Now, we're looking at our daily chart. This has our Japanese average technique that we have implemented in here, but there's a couple of things that I do want to look at. One of the things is, as I spoke about, I believe this was on Monday, because I was looking over the weekend at the charts, and it has been my belief that we've had some sort of an A, a B, and a C, and we concluded and went into an impulse. that was fine, and that worked in terms of the current model as this market was moving up. But once it started under pressure, it really caused us to look at another possibility. And the other possibility in terms of our current model is that 2 has not completed. So when we look, we have our wave 1 here. We have wave 2. That's still going to be an A, a B. But what we might be seeing on the C is a 3 count. 1, 2, 3 down to the lows, 62, and then finding support. That's the only alternative model at this point that really makes sense to me, if in fact we haven't completed the cycle of 2 and gone into 3. As I said, my sense is with this new additional input, meaning the last couple of days have been down, I certainly can't be as bullish overall on the near term as I was at the end of last week. However, when we look at this marketplace itself, and let me make sure that all of our data has been refreshed and reloaded. So I'm going to go ahead and reload that. Yes. And we talked about the fact that over the last couple of days, we really had these small-bodied candles. Right now, we're trading roughly at 84. The body size is still relatively small. We do have a large lower wick, which is telling us our elongated low. But in essence, we can see this potential. This is that matching low that we're looking right here and right here that we saw on the daily, as well as the short-term 320-minute chart. So my sense is this is the area that we definitely want to hold. If it holds this area, it tells us one thing. If it breaks through this particular number on a sustained basis, what that really is telling me is that we probably haven't completed this final wave here, and we could in fact go to test the 61% level, because we came close, but we never really reached that level, and that's right in here when we hit 68. So, as I say, we'll have to see how it unfolds, and we've got some interesting data coming out tomorrow, which most certainly could affect gold prices, and probably will. Traders, we're looking at a 2-day chart, and this is really what I call my big picture chart. And as I said, our sense is that we probably completed 2. However, here's our wave 1. As we continue with downside pressure, the question has to reemerge. Did we actually complete this 2? In fact, I was interviewed this morning for tomorrow's chart, this series, with Kitco Media and Kitco News, and one of the questions that I was asked was whether or not I have changed my mind in terms of looking for some sort of sustained rally. What have my views changed? And the answer that I gave, that I will relay back to you, is I haven't really changed my views as much as changed my timing. In other words, I still believe that we will get a sustained rally, but I also believe that sustained rally has to come after the completion of this downward corrective wave, and I am now wondering whether or not that's still in play. As I said, we have our numbers of where we need to see the market hold to really tell us one thing, and if it does break through those most recent lows, that is a completely different scenario. So most noteworthy has been the real pressure that we have seen in silver in terms of the recent activity. And you know that I've not been all of that bullish. In fact, we just saw an article today in which they were talking about imports into India. In terms of their gold imports, that rose, I believe, 16% over last year. In terms of their silver imports, that fell by 42% from last year's import numbers. That's an interesting fact. Now, the real question is, we do have this extreme low here. We've come close to hit that low here. Is that going to be supportive in the market? Because traders, if in fact it cannot hold this area, we have to look at some other areas in the market in which we think the market could go to, and those are just between 18 and 1850. So it's critical for silver to hold this area. If not, we have some real downside potential in that market. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly review and wrap up. Bye-bye.